Hello traders, Gary Wagner here, just after 10 o'clock in Honolulu, 4 o'clock in New York. It is Thursday, November the 3rd, 2016, and this is the Daily Report for Gold and Silver. We do have the precious metals trading mixed, although slightly lower when we look at COMEX gold trading off about $4. It is trading above 13 at 1304.10. The low is really important. That comes in at 1286.20. We'll want to talk about that specifically as we pull up our first chart. 1308, that would have been the high of the day. And as I said, currently trading roughly at 1304. And that puts it off about $4 on the day. Over to silver. Silver trading under some pretty strong pressure today. Almost a 2% drawdown, 1.86%. Off about 35 cents at $18.34. It has traded to a low below 18 at $17.9950 and a high today of $18.64. And when I talk about how the net changes are kind of funny, take a look at spot gold, for example, 1302, 1303. That puts it up about $6 on the day rather than a negative day. And silver is trading lower, but if you take a look at the net change, it is about a dime, and the net drawdown is about 0.5% as opposed to 1.86% on the day. But the net price, of course, is still the same. Of special interest to us, of course, is going to be the U.S. dollar. It continues to drop off about 0.25% on the day. Let's take a look at our first chart, talk about our current trade and our current stop in the market. So traders, with less than a week until the presidential election here in the United States, we absolutely see the volatility ramping up, especially in the precious metals. We have an increase of range, considering the range today had a low of 86.20 and a high of 1308. You can see that we've pretty much doubled our range from that typical $10 or $12 range to up to almost a $20 range on the day. Now, we did recommend that we move our stops yesterday. Our stops prior to that were sitting below 73, and that was based upon this 23% retracement. As the market came up and touched upon this high at 1308, my sense was that we could see a little bit of corrective action in the market. So my recommendation was to go ahead and to trail your stop below the low of this, of this candle right here. And the low of this candle, of course, came in at 88. Most traders would have put that at 86. The low today would have been 86.20. That would have avoided the stop, especially if you put it at 85. We are holding ourselves in on this trade because the stop came within, call it 20 cents to $1.20 of being hit, but wasn't actually executed. For traders that had their stops any tighter than that, they would have in fact gotten stopped out. I am asking those subscribers to email me personally so we can suggest a strategy for you to re-enter the market. My sense is that at this point, as we get closer and closer to the election, and as the polls that are coming out are suggesting that the race is closer and closer, we have that uncertainty factor really building steam. Now, that's done a couple of things. It's put multiple pressures on U.S. equities. Those have been down, of course, over this last week. And the U.S. dollar has been devastated from the highs that it reached just a couple of weeks ago to where it is currently. And at the same time, we have seen gold specifically really move nicely up the ladder. Now, I believe, attempting to find some support at around 1,300 per ounce. Now, we do have a close right now of about 1,304. And as you can see, we've got a nice up day in terms of the open to the close. That's what that green signifies. However, as of right now, we do have a slightly lower close, whereas the market closed, of course, at 1308 yesterday. It has closed at 1304 today. Maintain your current long position, maintain your current stops. For subscribers that move the stops below, but specifically, if the low was 88, they moved it to 87, 87.50, and we're stopped out. Please email me directly, and we'll talk about price orders that I would like you to put in to re-enter the market. So traders, as far as silver goes, that's been an absolute roller coaster ride. Let me compress this for a little bit so I can show you what I'm talking about and the interesting activity that we did see in the markets today. Of course, as you recall, I have been on record really suggesting that any silver traders kind of sideline as this market was consolidating in this area at around 1750, but more importantly, remaining with a price point that was below this resistance line that I now believe is support, and we've gotten some more evidence that in fact it is support today. And this line was in essence created by taking these lows in the market and then extending a trend line up from that point. If you recall, when this market broke above this particular price point right in here, we said that if you're going to be trading silver, you can add that to your long gold position. You would have gotten in roughly in the area of about 1810, 1820. But look at what's happened over the last couple of days. And to really illustrate that, we need to really uncompress this chart and look at specifically today's activity. We had the follow through yesterday, no doubt about it. Today, though, we have a dramatically lower day. It's off about 35 cents, but look at that low, how it kind of touched to this support line. And we can say that in terms of evidence between the support line right here, as well as our moving average, and this is set for a 28-day moving average, we can absolutely see that the market attempted or flirted with this particular price point. But at the point that it got this low, we had buyers coming into the market, moving the market back up. Now, it moved the market back up still lower on the day. That's the red candle, but nonetheless well off of these lows. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Maintain your current long position in gold. Maintain your current stop. Traders that did get stopped out, please email me for special instructions. We'll talk to you tomorrow for the weekend review. Bye-bye.